Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're starting with some significant regulatory news from Ontario's financial services sector. The Financial Services Regulatory Authority, or FSRA, has taken decisive action against Mortgage Smart Inc. by revoking its mortgage brokerage license. The individuals involved, Ranjit Dhillon and Kamal Dhillon, are also facing administrative penalties amounting to a total of $50,000. Steve, what do you think this means for the industry?
Well, Janine, this kind of enforcement action sends a clear message about the importance of compliance and integrity in the mortgage industry. FSRA's decision to revoke the license of Mortgage Smart Inc. underscores the regulatory body's commitment to maintaining high standards. For businesses, it's a reminder that adhering to regulations is not optional, but essential for long-term success.
Absolutely, Steve. It's crucial for consumers to feel confident in the institutions they are working with, especially when it involves something as significant as a mortgage. Revoking a license is a serious step, and it highlights the gravity of the situation. How do you think this affects consumer trust in the mortgage market?
Janine, consumer trust is paramount in our industry. When incidents like this occur, they can shake public confidence. However, the swift action by FSRA can also reassure consumers that the regulatory body is vigilant and proactive in protecting their interests. It's a double-edged sword. While it highlights issues, it also demonstrates the system's checks and balances.
That's a great point, Steve. It's about striking a balance between transparency and accountability, ensuring that consumers are protected. This also serves as a reminder for other mortgage brokers and agents to maintain ethical practices. Let's move on to another piece of regulatory news that's making waves in Ontario's mortgage sector. The Financial Services Regulatory Authority has issued a notice of proposal against Tracy Scimeca and Antonino, also known as Nino Scimeca. This is significant because FSRA alleges that Tracy Scimeca violated several provisions of the Mortgage Brokerages, Lenders, and Administrators Act, 2006.
That's right, Janine. According to FSRA, Tracy Scimeca was dealing in mortgages for remuneration without acting on behalf of her authorized mortgage brokerage. This contravenes Section 2.3 of the Act. Additionally, she allegedly received remuneration from an unauthorized entity, which goes against Section 4.1 of Ontario Regulation 187/08.
And it doesn't stop there. FSRA also claims that Tracy Scimeca was involved in giving or assisting in giving false information when dealing in mortgages. This kind of allegation is serious because it speaks to the integrity and honesty expected in the industry.
Absolutely. Integrity is crucial in maintaining the trust of consumers and the overall health of the market. FSRA is proposing to impose 2 administrative penalties totaling $200,000 on Tracy Scimeca, along with a compliance order to cease and desist from dealing in mortgages in Ontario.
And for Nino Scimeca, FSRA alleges he facilitated dishonesty, fraud, or illegal activity, which is a violation of Section 3.1 of Ontario Regulation 187/08. They're proposing a $50,000 penalty on him. This kind of enforcement action underscores the importance of ethical behavior in the industry.
That's a substantial penalty, Janine. It highlights FSRA's commitment to upholding the law and protecting consumers. Both Tracy and Nino Scimeca have requested a hearing before the Financial Services Tribunal, which indicates they want to contest these allegations.
It will be interesting to see how this plays out in the tribunal. Regardless of the outcome, It's a reminder for everyone in the industry to adhere strictly to the regulations and maintain transparency in their dealings.
Exactly. The regulatory environment is there to ensure that the market operates fairly and that consumers are protected. FSRA's actions show that they're actively monitoring and willing to take steps when necessary.
Let's talk about the recent allegations against Tracy and Nino Scimeca, a couple accused of running an off-the-books mortgage operation. This is a complex situation with serious implications for both the individuals involved and the broader industry.
That's right, Janine. The Financial Services Regulatory Authority of Ontario has launched enforcement actions against the Scimeca's. They're accused of arranging dozens of unauthorized loans and channeling nearly $200,000 in undisclosed fees through shell corporations. This kind of activity is a significant breach of trust and regulatory compliance.
It's troubling to hear that Tracy Scimeca, whose mortgage agent license expired in March 2023, allegedly brokered 64 private second mortgages over a 3-year period through a third-party brokerage, MIC Financial. She wasn't authorized to work with them, which is a direct violation of Ontario's Mortgage Brokerages, Lenders and Administrators Act 2006.
Exactly. The fact that she was acting as the main point of contact for borrowers, collecting personal information, and negotiating terms without proper authorization is concerning. More so, FSRA claims that more than $125,000 of the fees were funneled through her husband, Nino Scimeca, or his companies.
It seems that the Scimeca's also issued promissory notes to help borrowers cover down payments and closing costs, even when primary lenders prohibited secondary financing. Tracy allegedly instructed a borrower to submit a false gift letter to a first lender, masking the true source of the down payment funds. This kind of deception can have serious repercussions for borrowers.
And it doesn't stop there. FSRA also alleges that Tracy continued dealing in mortgages after her license expired, which is another violation of the Act. Correspondence from a lender in October 2024 confirmed her ongoing mortgage activity in Ontario. This highlights the importance of adherence to licensing requirements in our industry.
Nino Scimeca, while not directly brokering the deals, allegedly facilitated the activity by routing mortgage fees and loan funds through his companies. FSRA believes he either knew or should have known about the dishonest conduct. This kind of facilitation is just as damaging as direct involvement.
As part of its enforcement proposal, FSRA is seeking $200,000 in administrative penalties against Tracy Scimeca and a $50,000 penalty against Nino Scimeca. They're also looking to prohibit Tracy from dealing or trading in mortgages in Ontario. Both have requested a hearing before the Financial Services Tribunal, indicating they intend to contest these allegations.
It's a stark reminder of the need for transparency and honesty in our industry. As mortgage agents and brokers, it's our duty to uphold high ethical standards to protect consumers and maintain the integrity of the market. We'll have to wait and see how this case unfolds in the tribunal. Let's shift gears to some intriguing developments in the rental market. According to a recent report by Rentals.ca and Urbanation, the national average asking rent in March was $2,119. This marks the 6th consecutive month of year-over-year declines, which is quite a trend, isn't it, Steve?
Absolutely, Janine. While the month-over-month data shows a slight increase of 1.5% from February, it's interesting to note that this is the first rise since last September. Urbanation's president, Sean Hildebrand, suggests that renters were more active in March, likely due to improved affordability. It seems like a mixed bag of trends here.
That's true, Steve. While it's promising to see some action in the rental market, Hildebrand also pointed out that rents might continue to face downward pressure in the near term. The expected negative economic impact and potential job losses from the trade conflict with the United States could play a significant role in this.
Yes, and it's important to consider the longer-term perspective. The report highlights that average asking rents are still 17.8% higher than 5 years ago, when the COVID-19 pandemic hit. This long-term increase could indicate more systemic issues in the rental market.
Indeed, Steve. It's also noteworthy that purpose-built apartment asking rents have declined by 1.5% from a year ago, and condominium apartments have seen a decrease of 3.8%. Rents for houses and townhomes have fallen even more by 5.6%. This could provide some relief to renters who have been struggling with high costs.
Ontario, in particular, saw the steepest rent declines, with combined apartment and condo rents falling 3.5% to an average of $2,327 in March. Quebec followed with a 2.5% decrease. These regional variations are crucial for understanding the broader market dynamics.
And while regions like British Columbia and Alberta saw minor declines, Saskatchewan led the way for year-over-year rent growth at 3%. Nova Scotia and Manitoba also experienced increases. These differences highlight the varied economic conditions across the provinces.
It's fascinating to see how economic factors and local conditions can influence rental trends so differently. As always, renters need to stay informed about these shifts, especially when making long-term decisions about housing. This report sheds light on the complexities of the rental market.
Absolutely, Steve. It's a reminder of the importance of understanding both immediate and long-term trends in the housing market. These insights are valuable for renters, investors, and policymakers alike as they navigate the evolving landscape. Let's delve into the current state of the Greater Toronto Area's housing market, Steve. The latest statistics from the Toronto Regional Real Estate Board indicate a significant slowdown, with just 5,011 transactions in March. That's the lowest we've seen since 1998. It's a stark contrast to the bustling market we've seen in recent years. What's your take on this situation?
Well, Janine, it's certainly a concerning trend. The numbers reflect a market that is hesitant and uncertain. In 2021, we saw as many as 15,652 transactions during March. So, seeing just over 5,000 now is a huge drop. The current economic climate, influenced by both domestic and international factors, seems to be causing this hesitation among buyers and sellers.
Indeed, Steve. The Bank of Canada has lowered its policy rate significantly, which you'd expect to stimulate the market. But it appears that the uncertainty, especially with the ongoing trade tensions and political climates, is causing people to pause. Erica Reddy-Chiquette, a broker at Royal LePage Signature Realty, mentioned that people are paralyzed by this uncertainty. They're unsure of what steps to take next.
That's a good point, Janine. The uncertainty is palpable. While the policy rate cuts were supposed to encourage borrowing and spending, the broader economic concerns seem to be overshadowing those benefits. It's a bit of a paradox because despite the slowdown, there are still multiple offers for the right product at the right price. It shows that while the market is slow, it's not entirely stagnant.
Absolutely, Steve. There seems to be a particular segment of the market that's still active. Detached homes, for instance, saw over 2,000 sales last month. On the other hand, the condo market is struggling with an oversupply, leading to a stockpile of listings. It's overwhelming for both agents and buyers trying to navigate so many options.
Yes, Janine, the oversupply in the condo market is quite telling. With over 5,400 new condo listings in March alone, buyers are faced with a plethora of choices, which can ironically lead to decision paralysis. This is a critical time for strategic pricing and marketing. As Trevor Bond from Bosley Real Estate pointed out, there is more balance in the market now, which could be beneficial for first-time buyers looking for more affordable options under $1 million.
That's a silver lining, Steve. The balance in the market might indeed open doors for first-time buyers who previously found it difficult to enter the market. Despite the challenges, there are opportunities, especially for entry-level homes. It's all about finding the right fit for each buyer's needs and budget.
Exactly, Janine. While the overall numbers might seem disheartening, this could be a recalibration period for the market. As Trevor Bond noted, the emotions and irrational purchasing habits have toned down, which might lead to more sustainable growth in the future. It's a complex landscape, but one that offers a lot of learning opportunities for everyone involved.
As we turn our focus to the potential impacts of the recent trade tensions initiated by former U.S. President Donald Trump, we're seeing considerable speculation in the financial markets. The sweeping tariffs introduced by Trump have sent shockwaves through the global economy, raising fears of a recession. Steve, what's your take on how this might affect Canada's mortgage rates?
Well, Janine, it's a complex situation. While the global financial markets are certainly feeling the pressure, the idea that Canadian mortgage rates will plummet to pandemic levels seems unlikely. Carl Gomez, the chief economist at CoStar Group, suggests that the Bank of Canada is not inclined to slash rates to rock-bottom lows as they did during the pandemic. The fear of inflation remains a significant concern for the central bank.
That's a valid point, Steve. The Bank of Canada faced a challenging situation when inflation soared to a 39-year high of 8.1% in June 2022 after the pandemic. It's understandable they'd want to avoid a repeat of that scenario. But with the recent job losses in March, there's speculation about a possible rate cut. How does that play into the current fixed and variable mortgage rates?
The dynamics are quite interesting, Janine. Despite the drop in 10-year Government of Canada bond yields following Trump's tariff announcement, they have started trending upwards again. This upward movement suggests that while there's some volatility, fixed mortgage rates aren't likely to drop significantly. The yields are still higher than they were during the COVID-19 pandemic and much of the last decade. So, the mortgage rates might not dip low enough to spur significant activity in the housing market.
It seems like affordability challenges remain a significant issue. Even with the slight decreases in rates, the broader economic uncertainty might deter potential buyers. The looming recession fears, exacerbated by the trade war, could have a chilling effect on consumer confidence and spending, particularly in the housing market.
Exactly, Janine. The potential recession is weighing heavily on the market outlook. The trade war's impact on industries like steel, aluminum, and automotive could lead to significant economic challenges for Canada. Prime Minister Mark Carney's response with counter tariffs on American car imports further highlights the brewing economic tension. This could further dampen consumer confidence, affecting big purchases, including homes.
It's a precarious situation, Steve. As Carl Gomez from CoStar noted, the expected job losses and declining consumer confidence could significantly impact the housing market. People might be hesitant to make large purchases or investments in such an uncertain economic climate. It underscores the importance of staying informed and prepared for potential shifts.
Definitely, Janine. It's crucial for both consumers and industry professionals to keep a close eye on these developments and be ready to adapt to the changing landscape. The interplay between global and domestic factors is complex, and understanding these dynamics can help navigate the uncertainties. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.